Alright guys, I did something crazy. I invested $10 a day for 100 days straight, and this is how many stocks I have right now. Wow, that's visual overload. This guy probably doesn't know what he's talking about. I'm still gonna watch this video in its entirety. Now first things first, whenever we go through these stocks, I'm going to show you the percent of the portfolio that each stock is. I'm going to show you the potential return that I calculated off intrinsic value. And I'm also going to show a little bit of a recession risk factor, which is basically taking their equity and comparing it to their debt. Without further ado, let's get into it.
Oh my goodness.
Guess where we're headed? You know I own this, right? Now the first one, it looks like it's Mr. Car Wash. Potential return of 19.9%. Recession risk is pretty high, but it's only taken up 0.64 of the portfolio. And next up is Tyson Foods. Its actual potential return is 84.9%. The recession risk is medium, and it's taking up 0.71% of the portfolio. The return on invested capital is not great, and neither is the revenue. And I don't really agree with these analysts. I really think that this company could turn it around. Next is Capitalone Finance. It's got a potential return of 33.5%. It's got a high recession risk, and it's taking up 0.82% of the portfolio. And we got Ulta Beauty. I think it's close. I have to call them and let them know I'm here. Its potential return is 34.3%. It's got a high recession risk and it takes up 0.95% of the portfolio. And next up is Bank of America. It's got a 35.7% potential return, very high recession risk, and it's 0.98% of the portfolio. Now I know owning bank stocks during a potential credit crunch is probably not a good idea, but Bank of America is one of those banks that I would honestly be fine with holding. On to Target. Target's potential return is 15.6%. It's got a high recession risk, and it's 1.23% of the portfolio. And guys, we're almost at 1,000 subscribers. I'm so thankful for each and every single one of you. I hope to see you guys in future videos, and let's keep going. And on to the Warren Buffett stock, Berkshire Hathaway. Potential return is 41.5%, a low recession risk, and it's 1.55% of the portfolio. And who doesn't love some love? Southwest Airlines. We got a potential return of 58.2%, high recession risk, but 1.57% of the portfolio. And yeah, we basically own this big guy right here, so. AutoZone's got a potential return of 6.6%, very low recession risk, and it's 2.03% of the portfolio. And on to T. Rowe Price. T. Rowe Price's potential return is 7.9%. We got a very low recession risk, and it's 2.4% of the portfolio. Look how great this return on invested capital is and this revenue growth. But analysts don't really like this company, and I get it. It correlates a lot with the market, so that's fine. And Pfizer, pharmaceutical company, we've got a potential return of 39.2%, medium recession risk, and it's 5.07% of the portfolio. The return on invested capital on this company is honestly great, and the revenue is not too bad either. And I mean, check out these analyst estimates, that's awesome. In Dollar General, this is actually a position that I exited recently, but it's got a potential return of 37.1%, high recession risk, and it's 5.38% of the portfolio. And I don't see anything wrong with their return on invested capital or their revenue growth. It's just that their forecast seems pretty weak for the next coming years, so I'd rather sit out. Hey babe, have you seen any Discover junk mail? Found it. Discover Financial, we've got a potential return of 34.8%, recession risk medium, and 5.93% of the portfolio. Look at those analyst estimates, that's looking great. Who doesn't love China? JDcom, potential return of 35.9%, low recession risk, and 10.63% of the portfolio. This company's return on invested capital is still kind of wonky, but look at this revenue growth. That is insane. And analysts don't disagree. The outlook for this is looking very, very green. And one more, Alibaba, potential return of 20.8%, low recession risk, and 15.69% of the portfolio. It's the same story for this Chinese company. Return on invested capital is good, and revenue growth is crazy. It looks like every single analyst is loving this company. And we all know PayPal. PayPal's potential return is 25.1%. It's got a medium recession risk, and it's 19.38% of our portfolio. And almost every analyst loves PayPal. And the big dog, potential return of 30.5% with a medium recession risk, and it's taking up 25.03% of our portfolio. Disney is struggling to get back to their old profitability, but I can wait. It looks like we've got some bears in the chat, but honestly, the growth is looking awesome.
Hey babe, what are you doing?
Just seeing what the guys got going on. Also, if you guys were wondering, I made $60, so yeah.